Opportunity to network with everybody you can. Let's see here.
Something happened here?
Hello. I missed something. I don't know what.
Hello.
Hello, everyone.
Hello.
All right, let me see here. Where's my screen?
Well, it looks like we've got a pretty full class here as we get started. I'm going to go ahead and do my little my announcements here so we can get to the material as quickly as possible. Night 5, this is She Means Business, presented by Pathstone Enterprise Center and Occasional Elegance and Architect. You guys, we went over market and understanding your market, why you need to know your target market, and then how to do research on your target market, know where they are, know what their habits are, know what those demographics look like. We did that on Thursday, and you guys came back and you wanted more. So we're going to be talking about your business's legal structure. We're going to be focusing a lot on your LLC and things like that tonight. So be ready to take notes and be ready with questions that you may have. So, and of course, there are other types of legal structures, but the ones that we deal with the most tend to be sole props and LLCs. So just bring your questions and be ready. And Kim is going to be our presenter tonight. She has done a great job. She's going to continue to do a great job through tonight and through the rest of the series. But we'll get to Kim in just a minute. A few announcements I want to make you guys aware, a few things I want to make you aware of. First is that the Profit and Loss podcast, we have a brand new episode that just dropped last week. It is, we had a great conversation with Steve Hoffman, who is an investor, a venture capitalist, an entrepreneur out in Silicon Valley. So he's one of the big boys, as they say. So check that out. It's a great interview. And if you guys listen at the end, you have access to some free stuff. So go check that out. There's also, he'll tell you where to find your book, his book, and all that. So, but please listen all the way to the end, and Steve will give you an offer for some free stuff. It's a 2-part interview as well, and the video of that will come out. Is it next week, Jahida, or is it this week?
That'll actually be coming out this week. So Wednesday or Thursday, look out for the video podcast. If you folks have, some time to sit down and actually watch the video. If not, then you're more than welcome to listen to the podcast.
Absolutely. This is our first video podcast. So this will be our first video interview. It's going to be pretty cool, I think. I'm looking forward to it. So check that out. Also, the Dropbox, I sent out an email to everybody yesterday. If you didn't get the email, put it in the chat, let me know, and put your email address in the chat so I know that I'm sending it to the right email. Only one person's bounced back. But I sent an email yesterday talking about Dropbox and Thursday night. So if you're still having issues with Dropbox, please let us know. If you cannot access Dropbox, let me know. We need to get that taken care of. Everybody should have access to it. Jahida will put the link to the Dropbox in the chat today, so you guys can test that out again. Also, this Thursday we don't have normal class. Nobody's required to come. It doesn't, it doesn't count against you or anything if you don't show up. But I'm going to be holding a study table from 5 to 7 for anybody who wants to come, and anybody who has questions about anything we've talked about so far in terms of class material, or if you're having issues with Dropbox or accessing material, how to use certain resources, all of that. I'm going to be covering everything. I'm just going to be there to answer your questions. So from 5 to 7 this Thursday, it's not a normal class, but you can still come. I expect we will have a few people come. So if you want to come, I will answer any and all questions you guys have, or at least be able to point you in the right direction and get you the right resources. So Thursday, 5 to 7, using the same link that you have to get into class right now. So come and join us. And with that, Looks like we've added a few more people here from the waiting room, but I will go ahead and hand this over to Kimberly, and she will take us into the wild world of your legal formation and all the fun stuff that they have to take care of therein. And I will be chiming in from time to time. Please ask us your questions when you're ready, but now it's over to Kim.
Looks like Faustinia has a question.
Yeah, just want to clarify, is that 5 to 7 or 5:30?
I'm going to be on at 5, so we'll go 5 to 7.
All right, any other questions on the housekeeping and announcements? Like the church bulletin, everybody got it? Good. All right, so we're gonna get started with business structure. I will start off with this disclaimer. I am not an attorney, but I have played one on stage. We didn't talk about business structure, but we're going to talk about it tonight. So without further ado, I say your consideration here, you should give serious consideration into what structure you choose for your business. Drop in the chat, who here has an LLC or some other form of corporation? Let me see if I can bring up the chat here while that's coming up. Because you have a lot of, I see a lot of LLC, LLC, LLC. Good, good, good. You want to make sure you have the best business structure for not only you, but for your business. So some common issues that distinguish the different forms are taxation, liability, risk and control, continuity of existence, transferability, expense, and formality. Now, who can talk to me about probably, I will say what's in my opinion, the biggest consideration for forming a corporation? And I can see the chat, so you can drop it in the chat, however you want to shout it out. But what would you say is the biggest consideration when choosing your business entity? Liability, Sandra, absolutely. Protection of personal assets, liability, yes, yes. You want to make sure that you create separation between all the risks associated with running a business and your personal assets. And the second is that continuity of existence, which we'll talk about. So before choosing an entity, excuse me, you want to understand what's the relationships of the parties. Is it just you? Do you have partners? I will say if you have partners, we won't go into depth about partnerships tonight, but if you have a partner, you absolutely should, must stop what you're doing right now, run to an attorney and get a partnership agreement. That is vital. Tiffany, we're going to talk tonight about how you go from sole proprietor to LLC, but you absolutely must have a partnership agreement. That is the document that determines what the risks are, what the liabilities are, what the benefits are to the partners in that agreement. And so that's specifically if you have a partnership. And that's where what defines the type of entity, what you're doing, how you incorporate it, how is it formed, what's the purpose of the incorporation. You don't want to just get an incorporate just to say, okay, I'm supposed to be an Inc. just because everybody told me I should be an Inc. You know, you want to make sure that you have specific needs for that. What are the advantages and disadvantages and the tax consequences? That's a big one. Somebody mentioned taxes earlier. Taxes don't play. Okay, so as we talked about, deciding that structure, what's the liability of the owners? What's the ownership and the management structure? And what are the tax implications? Because each entity has its own implications when it comes to taxes and its own structure when it comes to the management of that business. And you almost want to think ahead a little bit, if possible, how you want to run the room or run your business and how you want your business to exist. So let's look at some general types of that. Sole proprietorship, DBA, limited liability, general partnership, your C Corp and your S Corp. Who can tell me what is the difference between a sole proprietorship and a DBA? All at once.
I would say a DBA is just a formality saying that you're in business, compared to a sole proprietorship is, I mean, both of them, I mean, they got very commonalities. Sole proprietorship is, I mean, I would agree with Tiffany. It ain't really nothing that like, they basically the same. Like, to me, it is just, it's got two different, one actually went to the state and said, I got this business, and then another person, you know, the sole proprietor just started doing business and didn't legal nothing, you know. So that's how I would do it. It's both of them are liable and on your personal assets, and they're a no-go.
Absolutely.
Neither one of them protect you on a personal level.
Absolutely. So we'll get into this. Really only one very distinct difference between the sole proprietorship and the DBA.
The difference is,
Go ahead.
is the difference that the DBA is just the name of the business is registered with the county?
Pretty much. Yeah, that's pretty much it. When you start a business, if you decide you're going to start selling cupcakes and you say Kimberly Mitchell's Cupcakes, or actually, to be completely legal, Kimberly Mitchell is the business and I sell cupcakes. That's a sole proprietorship. The minute I say Kimberly Mitchell's Cupcakes and I register that, then I become a DBA. And as Shay said, neither of them are providing any type of protections. So the purpose of becoming a corporation is to provide that protection. When you incorporate, even as an LLC, not a DBA, but as an LLC, that becomes a separate entity. That entity makes money, loses money, pays taxes, can be sued, just like a regular person. And you want to make sure that you set your business up in a way that maximizes those benefits and minimizes those risks. Some businesses are inherently more risky than others, so you want to have a stronger incorporation. But for most small businesses, an LLC will provide the protection that you need. Can you claim with a DBA? Is that taxes? If that's the question, is can you claim taxes and losses? The answer is yes. Oops, I didn't mean to do that. Take that back. All right. Who can talk to me about double taxation? Does anybody know what that means? When you look at the C Corp and the double taxation.
Does that mean they tax yourself, your personal income, then they tax the business as well?
Not quite. Close, but not quite. We'll talk a little bit more in there, but as a C Corp, the structure of it has shareholders. So versus an LLC, LLCs have members, your C Corp has shareholders. As a C Corp shareholder, which you will be part of as the owner, you will get shares or dividends from your ownership. And those dividends are taxed along with the money that the business makes. And you as an owner would then be part of that loss from those taxes. So that's the double taxation. The money comes in, it's taxed, and then as it's distributed to the shareholders, it's taxed again. You don't have that with an LLC because you don't have shareholders. And another entity is a nonprofit. That's where you're just going to be, you still are making profit. That's a really key term to understand. Just because you're not, it's a nonprofit doesn't mean you can't make a profit. It's just how those profits are distributed. They must stay with the entity versus getting distributed to shareholders. So some considerations you want to make. There's a B corporation is a type of nonprofit corporation. These are structures you want to get with an attorney to find out what the best structure is for your business. I will say that I also need to say here, as I just am thinking about it, what I'm speaking is New York State. I know we have some non-New Yorkers on here, so I would definitely encourage you to get with someone in your state to find out what the best structure is for your business from a tax implication and risk implication standpoint. But I will also say that when you're thinking about cost and what is cost the most to incorporate, your attorney's fees is where that comes into. So the more you can learn about what you need and what your business should have, the better, because the less involvement from attorneys that you'll need, the less time, I should say, from attorneys that you're going to need, which will minimize the cost for you to incorporate. So your C Corp. C Corp is going to be an independent legal entity, just like we talked about. It makes its own money. It loses its own money. It pays people. It gets sued. It does all the things that a regular person can do with money. And that's where you create that separation. And that is formed, I'm gonna have to close this chat here. It is formed by drafting and filing that certificate of incorporation, adopting your corporate bylaws. And these are all things that must be done as part of that incorporation and submitted. You have to have officers and directors based on those bylaws. Now, bylaws, I want to say, you don't have to have them as an LLC, but if you intend to grow and really get to the point where you do have shareholders, it's not a bad idea to kind of get in that rhythm while you're small. They won't have to be submitted anywhere. It's something that you would keep on your own, but you would create that just as, again, to get you into the practice. And Simone is asking if a C Corp is an LLC. It is not. C Corp is a separate entity from LLC. And we will talk about that a little bit later. We're going to get into that. So this here specifically applies to C Corps. And a C Corp can issue stock to those shareholders, and it records who owns stock. Do any of you ever owned stock in a company or purchased stock from a company as a direct shareholder, as opposed to, say, as part of a mutual fund or something like that?
Yes.
The very legal process. And if you've been in I've been in a smaller company where I had stock, and the meetings are very, excuse me, meaningful. With some, like as part of a credit union, sometimes you'll get proxy votes in the mail when they have board of directors meetings, because technically you're a shareholder. You're one of thousands probably, so they don't even really count that. When you have shares in a smaller business and you are a direct shareholder, then they need you to be at those meetings, because there are votes that take place there, and you have to literally vote, and your vote really does count. So it's really a good precursor to, if you're going to actually have a business, all the formalities that go into that level of corporation. That's that annual meeting of shareholders that I was just talking about there. Advantages from C Corp. Excuse me. Your liability is limited to the extent of your investments. Now, some exceptions to that are your employment tax, your sales tax, criminal acts. You can't, you cannot commit a crime and say, well, the business did it, I'm free, because it doesn't work that way. What you need to do is watch American Greed, 1 or 2 episodes. You'll see it doesn't work that way. Piercing the corporate veil. We'll talk a little bit about that. And the entity itself can be liable. It has an unlimited life. What that means is when you start a business and you are a DBA, say, if anything happens to you, once you leave this earth, the business is gone with it. With an LLC, you can do some things with it to sort of extend it, but it's still very limited. C Corps can live on after you're gone, and you have to really, you have to lay some of that out in terms of the shareholders and such, but it has a much longer shelf life than all the others. Freely transferable. Once again, that's that exit plan that we talk about. And sometimes it's an unintended exit plan, but you want to make sure that you have the ability with a C Corp to transfer that business. And you get to select the fiscal year, whether that be June to June, January to December, or to say June to July. So you get to select that with the C Corp. Disadvantages. It's more expensive because it costs it more, or it requires more time from an attorney. So that's going to cost you more. The filing fee is higher. There's that double taxation that we talked about. You get the income is taxed and is taxed at the shareholder level. Owners don't have control of decisions made each day. They have the board of directors. You have many officers in the company. There's a lot more layers in a C Corp than just you running a business. Highly regulated, highly regulated. And there are things that you have to follow. And as this says, you would, if you have that same corporate structure as General Motors, even if it's just 2 of you and General Motors is 250,000, you still have to follow the same things that they do to maintain that C Corp standing. It's difficult and expensive to liquidate. Once again, that's going to require a lot more involvement from attorneys. So your S Corp. S Corp is formed the same as your C Corp, and you have certain limitations. You can only have 100 shareholders or less, can't be affiliated with another corporation or LLC. You have citizenship rules. Now, some people use the S Corp as a tax election, meaning their corporate structure is LLC, but they're taxed as an S Corp. And that's where it says here, you must make that election by the 15th day of the 3rd month of your tax year. You're going to want to get with your accountant to find out if that's the best route for you. It works for a lot of people, but it's not something you want to do just to say you're doing it or just because you heard somebody say that's what you should do. You really want to talk to your tax professional before making that election. Your advantages, you got the same as a C Corp, but you don't have the double taxation. That becomes pass-through income similar to your LLC. It gets reported on your Schedule C as income, and your losses are deducted from your salary or your income. Disadvantages is it's more expensive to form than proprietorship or partnerships. You have restrictions on eligibility. You have to make federal and state elections, and if it's revoked, you must wait 5 years before you can reapply. So that again is where I say you want to make sure that you talk to your tax professional and stay on top of that so that if it is the best option for you, you don't do anything to lose that status. Any questions on those? Okay, so now we're gonna start from the beginning, from the easiest. Those two are kind of like your C Corp and your S Corp. Very few small businesses are incorporated at this as that structure, but it's good to have that in mind for when you grow and as you scale. Now we're going to pretty much talk about the bottom up. These are where most businesses start. And trying to think of the best, nicest way to put it, but you have a lot of businesses out who are really not operating legally at all, meaning they are using assumed names, but they haven't even gone to get a DBA. So they're technically not even sole proprietorships. They are simply illegal businesses. So again, with a sole proprietorship, that business name is you. It is you doing business. There is no separation between you and a business. There's no separation, no protection between you and that business. If you are Kimberly Mitchell's Cupcakes or I wouldn't do Kimberly Mitchell's Cupcakes. I probably would do something like Kim's Cakes. Kimmy, I'm trying to stay away from that other Kim, but Kim's Cakes. But you would have that business without any type of DBA structure, then you're not a sole proprietorship. But if it's Kimberly Mitchell and I'm doing whatever I do, that makes me a sole proprietorship. And that business by default must have my legal name unless I have a DBA. If I don't have a DBA, it can be, if I have a DBA, it can be anything. Without a DBA, it must be my legal name. I control the business, I make all the decisions. There literally is no barrier to formation, no cost to formation. I simply just begin doing business. Create business cards with my name on it, I'm up and going. It only exists for the life of the owner, meaning just as easily as it started, the moment I die, the business dies with me. And again, this happens automatically when you start a business and you do not get a DBA. So advantages, easy to form. There's nothing extra to file. It is just you, your business, your income. You have all the control, you assume all the risk. There is no limit to how much they can get from the business because the business is you. So the limit is everything they can get out of you and then some. You're be hard pressed to raise money from investments as a sole proprietorship simply because of all of that risk. And your personal property is as exposed as you are. Questions? Okay, we'll keep moving. DBA is identical to the sole proprietorship in terms of risks, advantages, disadvantages. Only difference is you have gone down to the county and received your doing business as fictitious name certificate. When you do that, the county clerk checks to make sure no one else has a DBA in that name. However, someone could have an LLC in that name. Someone could have a sole proprietor, well, not a sole proprietorship, but they could be operating illegally as a sole proprietor with that name. There's no, the only check that's done is at the DBA level. So you won't have two business names at DBA that are the same business name. You can also have a DBA partnership. Now, it is not anything that I can think of any good reason to do that because now you've got two people totally exposed with no protections as a DBA, but there is a structure for that. And you can have 2, 3, 4 partners on that DBA certificate. So the business profits may place the owners in a higher tax bracket. That's because all of that income of the business flows right through you. And that becomes part of your income on your taxes. Questions on that? All right, so we move to limited liability, the beautiful, lovely LLC that I saw in the chats. So many of you have. You have members instead of shareholders. There are countless single member LLCs out there. So just because it's just you does not mean you can't be an LLC. You can. And you can be as invested in the company as you choose to be. That's something I'm guessing is going to be in one of the later modules in terms of your personal capital that you put up to start the business. But if you're going to create your LLC, I definitely would say to keep track of that. You know, as a DBA, that's just you doing business. But once you become an LLC, that LLC is a separate entity. So money you put into it, you want to keep track of that. There's no restrictions on the members, on the number of members, and you have the same liability for debt as shareholders. So you want to make sure that from a debt standpoint, it makes sense for your business. You really want to talk to that tax professional. I can't say that enough. It is a flexible business structure. You want to make sure that you are following the regulations. And this one, your LLC is probably one of the least regulated corporate structures that's available. So make sure that you understand what all of that is, along with your creating that business structure for your business.
Hey, Kimberly,
Yeah.
I don't know if you saw this message. It says, are you able to change your status even if you're already established? For example, incorporated to LLC.
Absolutely.
Thank you.
Just like if you go from a DBA to an LLC, you can go from an LLC to a C Corp or an S Corp. I see Kira's raised a hand.
Kira, you want to unmute yourself and ask your question?
Oh, I'm sorry, I meant to lower it before. Sorry.
No problem.
I'll jump in here for just a second. It's a lot easier to kind of move up in corporate structure than to move down. So it's a lot easier to go from sole prop to LLC or LLC to C Corp than it is to go from C Corp down to LLC or to sole prop. Is very difficult to do that in most instances. So just be cautious of that. Start small. Start with less paperwork when you can. One point I want to make is with sole proprietorships and LLCs, even though, especially with sole proprietorships, you're going to feel like, because you are the business, you should still have two sets of books. You have your personal finances, you have your business finances. Keep those separate, be able to, know that I brought in this much revenue and I spent this much on these things. And then I have my personal income and this is what that looked like. So separate bank accounts, keep things separate, still run it as it's a business, so run it like a business. There's just a different veil of protection and a different structure there.
Yes, and you can get business bank accounts with DBAs. So as long as it's great to start that from the beginning. Tiffany asked, do you have to have a physical structure building to be an LLC? You do not. It has nothing at all to do with your physical location or even what your business is. What is a member? Is that a person that is part of your business? It's one of the owners when it comes to an LLC. As a C Corp, you're going to have shareholders who are owners. With LLCs, you have members.
Kimberly, can I?
Tiffany asks, how do you do this when the business is not making any money? There are no taxes to file or claim. You absolutely should still file your taxes, even if you have losses. if you're operating your business, you should have some sort of operating activity, be that income or losses. And either one, you want to make sure you file those.
Mike, did you have
Kimberly?
something you wanted to add?
Yes.
Yeah, I just wanted to piggyback again off one of the things that Kimberly mentioned, but that Adam also mentioned. It's not even the aspect of difficulty in going backwards in the establishment of structure. IRS is not going to allow you to do it. If you don't want to sit around and have IRS at your back door every day, you're not going to go from an LLC into a sole proprietorship, and you're not going to go from a C Corp into a sole proprietorship. You're going to keep moving forward. And normally you're going to want to do that because of the kind of exposure, as Kim had talked about earlier, that the company may actually have. There's another part, and I'm going to mention this now because it doesn't come up often. Kimberly mentioned the fact about filing the taxes despite losses. Please, 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 despite what people sit around and tell you, because you did not make any money, which is always an amusing comment to me, if you have operational losses, you should actually file, because the reality is this. As a financial person, when you're trying to go for loans, even with regard to trying to get an investment, the business did not exist if taxes were not filed. You cannot justify you made a dime, or what money you may have actually put into the business is irrelevant if you don't file your taxes. Filing your taxes is the one way that shows legitimacy of the actions you've taken supposedly as a business. So whether you have made a dime, i.e. the profit line, or not, file the taxes, because that's what shows us that you actually have activity with regard to this business in which you've engaged.
Absolutely.
Thank
you. I run into this every week, and I have for years. When people come in and they want to take a loan out from us, if they have tax returns, I can back that. They're proving to me that they had this much income and this much loss and this much expense. And I can say, okay, these are real numbers. But if you come in and you're like, you know what, I haven't filed tax returns for the last 3 years, but I've done, $50,000 in sales. I have no way to prove that that's true. I have no way to back that up, and I can't use that stuff. Now, if you're a startup and let's say you started in December and you don't have tax returns for the year you started, that's different. But if you've been operating for a year or more and you don't have tax returns, or even part of a year or more, and you don't have those tax returns, you don't have any. You have a very small recourse to go and prove that you have the income or expense that you say you had. So, so just file it, even if it's $1,000 in expenses that you had. File that, because it can also come off of your AGI. So.
Mm-hmm. And that applies even if you're a DBA.
Yep.
Folks, I know Faustinia has a question. Faustinia, you want to mute yourself and ask your question?
Yeah. So with the LLC, is this the case where, with COVID happening, I saw people saying things like they paid themselves and made themselves the employee. Is this under the LLC where you set it up so that you are an employee just in case you want to get PPP? Or can you talk a little bit about that? Or is it under this?
You can pay yourself as a DBA. It's a business decision, and it's how you set your business up to do payroll. It's as an LLC, you have protections in terms of risk and lawsuits and things like that, but that's separate from your operational considerations. And paying yourself and putting yourself on your payroll is an operational consideration.
Yep, we ran into this a lot when we were processing PPP loans, and when I was talking to my friends in the banking world about PPP loans, there were people who were like, I've been taking money out of my business for years, or they did it last year, and they just didn't have the paperwork to back it up. They didn't have the paper trail. They didn't have tax returns. they were paying themselves under the table. They were running the business with no formality for years, and they could not get a PPP loan. They had no income because they were not doing things the proper way. So it's, I'll say something that Mr. McCarley says all the time. It's not a bad thing to pay taxes. You know, even if whether you have no tax burden or a little tax burden, paying taxes is a good thing. One, it means you're making money. And two, you're paying for roads and teachers and police and fire and all that, you know, all that. So you're paying for our infrastructure. So you know, we need that to keep things functioning. We need that to help to be able to do things like PPP and things like EBT and all that. So paying taxes is a good thing as a business owner.
Yeah, and I wanted to make sure I clarify that when we're talking about paying yourself, as Adam said, that's a formal thing. There's a payroll, there is a paper trail that shows you paid yourself on a regular basis in a very structured manner, versus someone paid you to fulfill that contract and you put it in your personal account and used it to pay your bills. That's not paying yourself. That's commingling funds. So you want to make sure you're going to put yourself on the payroll, do that literally, make it a payroll function.
And we have 2 more questions. It looks, Laurencia, I know your hand was up first. You want to mute yourself?
Hi, everyone.
Hello.
So basically, I just want to know, I put it in the chat. So I'm trying to understand, I really get confused with the business structures. I was listening to the sole proprietorship and the DBA. Do you need both? Which one do you prefer to have over each one? Or because I do want to start working, but I heard what you guys said as far as not working legally. So I'm just like, which one can I start with, or which is the best?
Okay, so the sole proprietorship is you literally just starting a business, just going into business and conducting business, I should say. When you conduct business as, let's say you conduct business as the best teddy bear business. If you don't have at least a DBA, that's where you're operating illegally, because you cannot conduct business under an assumed name without that DBA certificate. That is doing business as. So if you're going to be the plushest teddy bears, then you should have at least a DBA at the county clerk office.
Okay, because go ahead.
I will say that neither the sole proprietorship DBA provides you any protections, because that is strictly you doing business. And that means all of the risk is yours as well as all of the rewards. Does that answer your question?
Yes, thank you.
Sure.
And I know Miss Cynthia, I believe I saw your hand up. Did you have a question as well?
Yes, I did. I keep getting, now, I had started losing money, so I thought I was going up, and then I started losing money. And so Square, that's what I use for my business, wanted to apply for a PPE loan. And I keep in my head, okay, you're going to have to pay this back. You're going to have to pay this back. So I just refused to apply. And then I see these other things sending me emails, Womply or something. And I'm just, no, it's just a debt that I just don't want. They say it can be forgiven. No, I don't know. So is that something I should look into? Because I have the proof where the money was here and then it went down, and I did file my taxes, so it can be proven. But should I get a PPE loan for my business to keep buying jewelry and to help with advertising and like I will pay my kids, well, when we were able to go vending, I would pay my kids for setting up and breaking down, the vending tables and everything like that. So, but.
Can I make a comment on that?
Mm-hmm.
All right, Cynthia, this is the thing, and for everybody that's on this call, the PPP, Payroll Protection Program, was primarily established to cover payroll. That is what it's supposed to be used for, is to cover payroll for employees that you actually have. There were a couple other items that it could be used for, which may have been rent in an establishment, interest payments on loans that you might have had, which were associated with the business. It was never designed for operating monies, strictly for payroll. The Small Business Administration's Economic Injury Disaster Loan, which is a loan, which is not forgivable, is what could actually be used for operations, i.e., picking up some other individuals to, and this is the other oddity, although they'll be talking about this forever. It is for the operations. It also was assumed that it was to cover traditional and or historical type operations, not the fact that you went out and bought some new equipment, that you even bought PPE, personal protective equipment. Because there are a lot of businesses that are actually now having a problem with the fact that they had to be COVID ready, COVID prepared, or COVID protected. And they used the SBA idle monies to do that, which was not its original intent. There were actually other grants and or loan structures in place throughout the state of New York that could have actually helped that. But be very clear that the PPP was primarily designed to cover the loss of quote unquote payroll. You had people, you had to lay off, you tried to bring them back. And actually I was in a webinar and they asked the question, well, my people aren't back, I got a PPP, should I still pay them? And the answer was actually yes. If you can't replace them, then you better find a way to sit around and pay them, because you actually took that loan out, and that portion of that loan would not actually end up being forgivable because it was not used for what it was intended. The SBA EIDL, again, which is a loan, you can use it for operational things, gas, lights, electric, phone, okay? Things that you traditionally actually spent for running the business. Because there was someone who made an item in the comment about what it amounted to, they didn't have records. You need to have records for everything you do, good, bad, or indifferent. I don't care if you make money or don't. You are totally responsible for everything that goes on in the business, one of which is also justifying the fact that you existed.
Yes, thank you. So hopefully that answers your question. I know I see a couple of others in here that I want to get to before moving on to the next slide. Shanice asks, is there a way to change the name of the LLC? Yes, you can do that through, I will again speak to New York State. Your LLC was formed through New York State, so you will go through New York State to change your name. I'm not sure if it's the same for the other states on this call, but that is how you do it in New York. Tiffany asks, how do you do this when business is not making money? We got that one. Laurencia says, so to be sure, you're saying have a DBA or a sole, but which one? We talked about that. Any questions in the chat here?
We have a couple hands up. I know I don't know who this is, but iPhone has their hand up.
I do not know how to change it to my name somehow. I've not figured this out as of yet. Yes.
Okay.
Which I don't know how to label
now.
Thank you.
You're welcome.
So yes. So this is actually why, I needed this course, and I'm very grateful to be in this course because I know that I've been basically not keeping any type of financial tracking per se of my business. So I actually started a business in 2008, which has a DBA, which has its own bank account. And technically, yeah, all of my personal money I've been putting into that bank account. So I have actually probably, which I put in my answer, have spent over about $20,000 lost, shall I say, over $20,000 since 2008, just trying to do different type of endeavors. My current company, which of course is the Working Against Destruction Theatrically, I honestly felt like instead of getting another DBA, I wanted to kind of make both of my companies LLCs. And I just don't know how to form that because yes, I was really confused on the members type thing because I couldn't find anybody who, would say, oh, well, that's a great idea. Maybe I should go into business with you. So I just felt like I couldn't actually get incorporated. So obviously now I know I need to like keep track of all of my records. But like, how do you figure that out? Can you do 2 LLCs or should I just have my main business that I started in 2008 be the LLC and then have the other businesses underneath that? Or does that have to be like an S Corp type of situation?
It does not. What I would recommend is you first speak to an accountant to understand what's the best route for your business. And the reason I say that is you can have, it is essentially like a holding company. So your LLC can essentially own other LLCs. But when you do that, then the risk flows between those LLCs. So if you have Greatest Cupcakes LLC, and that owns Greatest Hamburgers LLC, if someone sues Greatest Hamburgers LLC, they also have access to Greatest Cakes LLC. Does that make sense?
Okay. Yes. Yep. Perfect. That's exactly
So
what I
you want to talk to someone to find out how important in terms of advantages and disadvantages of connecting those two based on the level of risk.
Okay. Thank you.
Mm-hmm.
Sandra, I see your question here. I am not going to touch that with a 10-foot pole. If Dave Krause is on and he wants to take a shot at that, I would more than welcome Dave, but I do think you'll want to talk to a CPA about that. Dave, do you know, I think Dave's on here, but anything about using 401k withdrawals to fund the business, and then can she take that as a loss? Can she file taxes against that?
So you use your 401k and plow it back into your business and then spend that money in your business?
Correct, yes.
Yeah, I hesitate to wade too far into this because I don't do taxes as a primary way to make a living. This is kind of complicated. I would take this to your tax person and ask them.
When any money that you've actually invested or injected into your company itself are funds which actually are in the company, you're going to file your taxes because it's not income. You have expenses which are associated with the business because nobody necessarily asks where the money comes from unless it's revenue specific and identified. So the issue always gets to be, I have income, I have injected some funds which doesn't show up anywhere, and I've spent money in the business. And so therefore, whatever money has been spent in the business is actually a business expense. But as David has said, Adam has identified, and Kimberly has said, because of how you did it, because I actually think this question has a backside to it, you want to actually talk to a tax specialist, because apparently in the last couple of years, there have been some interesting changes to the tax law. But again, expenses are expenses. Doesn't matter where the money actually comes from. The difference is what you've injected into the company is not classified as revenue. And so therefore, it really does not impact the taxes one way or the other.
Yeah, great point. Sandra, you've made an equity contribution to your company. So it's not, you haven't put revenue in because you didn't make a sale, it didn't come from the outside. And Michael makes a point that tax law got a little funky last year, especially with regards to withdrawals from retirement funds. So there may be some, there were some changes to that where the fees and the taxes were different in 2020 than they were in prior years. You were able to withdraw more funds from retirement funds. So I can't wade into that because I don't know the specifics.
Okay, I'll talk to a tax specialist, but thank you for the feedback, and thank you, Michael, for that clarification, you know, with the use of the business expense. So I'll have to look more into that. I kind of just pushed it aside, but I'm thinking more of looking into that. I have had contact with a tax person, so I'm looking to get back with them. Thank you.
You're welcome.
I'm gonna, just so everybody, we're recording, so I should probably say this anyway, but any advice we give is, we're not attorneys. We are not giving you direct advice one-on-one, and we always recommend that you talk to your CPA, to your attorney, to your tax specialist, because they know your business better than we do, and they know your situation better. So we want to make sure that you're getting to the person who has the whole picture and not just part of it. And that's for everybody, me included. So Kira has a question. Kira Hudson.
Yes, I have kind of a two-parter or whatever. But the first question is, if you currently have a DBA or you're a sole proprietor, and you decide to quote unquote take the risk of not being an LLC or incorporated, what is I guess a good percentage margin to have for liabilities? And then my second question is, when you file your taxes for your business, do you do it all in one swoop with your personal taxes, or you just do a whole separate account and then, you know, you just do two separate ones, what, 1040s?
When you're,
you're
go ahead, Dan.
I was just going to say, when you're a DBA or an LLC, or I think even, you can file as an S Corp, you'll file a Schedule C, and that'll be attached to your 1040. There may be a few other supporting schedules you'll have with your tax return, but it all flows through to your personal taxes. So whatever that income, whatever that plus or minus is, whether it's a net positive or a net negative, that'll be shown up as part of your adjusted gross income. So you'll file a Schedule C, and then some other support. I know, like what, a 1065 or something like that. You'll file those, and then with the liability stuff, what I would recommend is, again, I'm going to push this off. Talk to an your insurance person, your insurance agent, broker, because they will tell you, based on the business you're in, what kind of insurance policy you need to have and how much coverage, or, if you have a personal umbrella or something like that, if that can cover, what that covers, all of that. And then Kim, was there something you wanted to add to that?
I was going to say virtually the same thing. I would add that insurance does not preclude people from coming after your personal assets. So depending on the type of business you have and the amount of risk associated with that type of business, you might really want to consider incorporating. If you're okay with being a DBA and that level of risk, just understand that there really is no barrier between your personal assets and a lawsuit.
Okay, thank you, guys.
Sure.
Laurentia, do you have another question? Or is your hand just up?
Yes. Is it bad to have multiple LLCs? Like, to just have multiple?
It's not bad. Each one you would still have to, it's about what you want to track and what you want to do. You have to understand that each of those is its own entity, and you have to, for lack of a better term, feed and water them separately. They are not connected. You have to, if you have individual ones, you have to treat them individually and not commingle those funds, not overlap any operational things. They are separate, even if they're underneath each other. If you have one LLC owning another LLC, they are still separate in terms of operation and the way you want to treat them, but they flow through in terms of risk. So you want to really think about and talk to, probably again, your tax person would be the best person, the first best person to speak with, because they're going to be able to help you understand all of the things that you must do to maintain the regulatory standards for each of those entities and how it affects you to have multiple ones individually or certain ones owning other certain ones. They're going to be the best person to talk to about what's best for your situation. Technically, all of those things are possible. So it's just you deciding which one is best for your situation.
Okay, because I'm very, I haven't even started anything. So I don't even have an accountant. I don't have a financial advisor. So I'm just really at the beginning of everything. So that's good to hear. I know I have so many different ideas that I want to do, but I'm just trying to figure out if they all need to be separate, or like you're saying, one can own everyone, and keep it going.
Mm-hmm. Mm-hmm.
Okay.
There's benefits to that, but really it depends on your specific situation, what makes the most sense and how to structure those multiple entities.
Well, this is a great question from Destiny.
Thank you.
How do you go about finding a good accountant, financial advisor, CPA, et cetera? This is a great question. Kim, do you have any advice on that? And then I'll also ask for Mike and Dave to, Mike and Dave to chime in too.
I will say that we recommend that everyone has what we call a bail team. Your banker, your accountant, your insurance, your lawyer. So you want to, when it comes to money, I will tell you personally, when it comes to money, and I include an attorney in with the accountant on that, I go by personal recommendations. I want to talk to people who have spoken to these people, who've experienced these people, who have some idea of the integrity of these people, because when you are with these folks, these are not people you want to keep at a distance. You want to be 100% upfront and honest with your accountants. You want to be 100% in lockstep with your attorney, and they have to know all the ins and outs of what you do. So it has to be somebody you can trust. I would absolutely go by your personal recommendations for those. Now, once you get one of those, they typically know of other professionals and they can recommend other professionals based on where you are with your business. Because somebody might recommend an accountant that is very high level and charges $250 just to come and sit and talk with them for an hour. You may not need that level of accountant where you are. So when you have that team, those couple of players that from the beginning, they can recommend other players for you that match your level where you are with your business. I would also say from a banker standpoint, you want to go in and talk to those people. Wherever you have your business banking account, go talk to them, let them get to know you and your business goals. You want to build that relationship before you need it, because if you come running in there with your hair on fire saying, I need a loan tomorrow, that's not going to happen if you don't have that relationship. Might not even happen if you have the relationship, but it really won't happen if you don't have that relationship.
Kimberly,
I'll add.
Sorry, Adam. Sorry, can you just repeat the points? You said banker, accountant, lawyer, and what else?
Oh, your bail team, your banker, accountant, insurance agent, and lawyer.
Thank you so much.
Mm-hmm.
I like that. I was just going to add that for the banker part, I've been a banker. I've been the CEO of a credit union. The people who come in right now, I make loans too. The people who get through the process the quickest are the people who I have an established relationship with, because I know their business. I don't have to ask as many questions. I'm up to date on what's going on. I know the situation, and I know how to help them navigate through the situation, instead of it just being a cold call one day. Hey, I need $50,000 or $10,000 or, $200,000, and I don't know anything. If they come in and it's already a warm conversation. I know what's going on. It's a lot easier to get them into the system, through the process, and sign on the dotted line. Or even if I can't help, it's a lot easier for me to make a phone call when I have that full story already that I've gathered over some time. So I really like that, Kim Bail, B-A-I-L. So banker, accountant, insurance agent, and lawyer.
Yes.
All right, we do have one more question from Faustinia. I don't know if we want to save that towards the end. I know we still have a couple more slides in the presentation, or if we want to address that now. Oh, there's Sharice as well. Y'all let me know.
These two, and then we'll get to the presentation, and then we'll come back and wrap up on any others.
All righty.
My question was about, maybe I missed something, but I didn't realize I would need an insurance person for most of the things that I'm doing. I mean, obviously, if I have an event like the 5K, we need insurance for that. But when I'm doing facilitation of meetings or public engagement, I never even realized that I would need an insurance agent to cover me in some way for the services that I provide in that aspect. So how do you know when you need and don't need?
The day you begin operating a business, you need an insurance agent. That is the day. And I look at it, you have to look at it from both sides. If you have something happen in the course of you doing business, and that could be I'm not quite sure what it is you do, but you say you go to different meetings. So let's say you're going to meet someone, or they meet you at your office, and your office is in your home, and they trip and fall. They're going to sue you. They're going to sue that business. Everything about you doing business is going to get sued. You need insurance for that. But also, if you are conducting business, that business relies on you to bring income into the business, or you have equipment, you have supplies that you use for the course of your business to generate revenue. If something happens to you and or that equipment, your insurance will cover that, so that your business doesn't die because you got hurt, or your equipment, somebody dropped your equipment. So insurance is critical the day you start doing business.
Sharice, you want to unmute yourself and ask your question?
Okay. Hi guys. My question is, I'm opening up a new business now. I have a business running. I do have a banker. I have insurance, but on my new business, I have to go to the bank. Is there a certain number of money that I need to put in there, or like when I go to the bank, what am I saying?
Are you talking to start your account?
Yes.
That will vary by bank, but I will say that, again, even if you only have $50 to put in there to open it, sit down and talk to someone, begin that conversation, let them start getting to know you and your business. If you have a business plan, it's good to have that and go over that with them. But you want to make your banker aware of your goals, where you are, because some banks have different services that can help you and support you where you are right now. But also the banker has a good relationship with the underwriters. Those bankers are going to be your advocate. So as you talk about where you want to go with your business, they want you to succeed. They want you to get to where you can be, to take out that loan or whatever that financial product is, so that you can grow and be a long-term customer of theirs. So wherever you decide to open that account, however much money you drop in that account the first time, begin that conversation with one of the banking professionals there.
And my other part is I do have a bank already for my salon. I do everything, but I have a problem every year with an accountant. Every year. I still don't know where to go, who to trust. Some guy walked up to me just yesterday and he's like, I'm an accountant. Do I trust him with my business?
No, you heard what I said now. And when it comes to the money, you have to know me. You have to know somebody that knows me. And you have to have had experience with that person, because I just can't have that money relationship with anybody. I can't just walk in off the street and begin to build that money relationship with people. So my particular rule is nobody at that level comes to me cold. You have to know someone. So say, talk to other business owners who might have someone that they can recommend.
Yeah, I can do that. Thank you.
Yeah, part of this here, and everybody needs to really get to understand this. Part of being in business was not designed for you to be in business by yourself. You have to talk to other people about what they do, who they use, how they do things, okay? Because you will go through, and I'm sorry, Sharice, that you had to go through some of this, and you may still go through this, but I know you got a bag of money sitting in the backyard, you're cool, you're all right, okay? But you have to begin to also pay attention to the people that you're bringing on and begin to learn part of what they're doing. Not that so you could do it, but so that you understand what's actually happening. And as Kimberly said, comes to the money, listen, who do you know that I know, okay? Who have you dealt with that I know, that I can turn around and go to them and say, how's the person who does your books? They all right? But I do my taxes every year. I get 2 cents back. I'm happy. Now they'll start complaining when they don't get any money back, but that's a moot point, okay? Go through that cycle, get to understand the people you're actually dealing with. But like Kim says, know somebody or talk to somebody to get to use their particular person. We don't have to function like we're islands out here. This makes no sense whatsoever, okay? Talk to people, help the business grow, help reduce, hopefully, ultimately, the strain on yourself.
And you had something.
Oh yeah, I just want to add this real quick. First thing, when you open up a business banking account, whether it's a checking or a savings or a credit card or debit card, whatever, ask the question, what's my monthly fee? What are you guys going to take out of my account every month? Because whether you have money in there or not, they're going to take their fee. Also ask, what's my overdraft? Do I have overdraft protection? If I don't have overdraft protection, what's my fee? Ask them all these questions. And then you ask, how can I get rid of that fee? How can I get rid of that monthly service fee? Ask the question. There's no harm in asking the question. A lot of times at the credit union, people are like, how do I get rid of this fee? You know, what do I need to do? And I could tell them. Or there are people who come in and I can see that they're working really hard, you know, and I can waive these fees for, you know, for 3 months, 6 months, whatever that is. There's also, there are really weird rules on overdraft, and I'm not going to get into them. Ask about overdraft protection. Ask if you need it. Ask what that does for you. And then ask your banker how you can avoid overdraft and overdraft fees. The other thing goes to this whole, everything we're doing right now. Ask questions. You're not going to look stupid. You're not going to look unintelligent. If you don't know something, you have to ask, because you don't want to be sitting there in bed going, oh my God, I don't know what this means. I don't know what this is going to be like. I don't know this. Ask somebody who knows. Come here every week and ask us those questions. Ask somebody else who you think would know. Start, you know, calling people, get referrals, get those personal recommendations. So ask the questions. Nobody's going to think you're stupid. If somebody does look at you like you're stupid, move on to the next person, because that person isn't worth your time.
All true. Okay, so we've got we have 12 minutes, so we're about to get through this presentation so we can get to the questions, because I see that there's some messages in the chat and I haven't even had a chance to look through all of them. So where are we here? LLCs. To form the LLC, you have to have articles of organization. The state, and again, I will speak for New York State, They have templates on the site where you file to create your articles of organization. They are not difficult, but I would say to put some thought into them. They can be amended afterward if you decide to make some changes. It's not quick, it's not cheap, and it's not done without the help of some sort of attorney. So give some thought to these articles of organization to begin with. Publish the notice of formation in 2 papers for 6 weeks. That is the second most expensive part of forming an LLC. If you choose to use an attorney, it's the second. If you choose to do it without an attorney, it's the first. Because locally, it can be very expensive to publish that little phrase in the paper. If you look through your paper in the classified section, you're going to see those little notices that the LLC is forming, and this is their agent of record and who you mail things to. That has to be published in 2 papers for 6 weeks. When you file for that article of organization, that is your official filing date. You will receive something, and again, I'm speaking from New York State, you're going to receive something in the mail that looks very bland, very plain. It looks like a receipt for your filing fee. Keep it, because that's what people are going to ask for when they ask for your filing paper with New York State, that receipt. I don't know what I did with mine when I first got it. I was like, okay, yeah, I got it. Keep it. So when you do that, then you're going to file those or publish for 6 weeks. They're going to send you a receipt, those papers that you file in. Keep those, because you're going to need to send those in as proof that you published for those 6 weeks. Draft that operating agreement. It is not something that the state is going to look at, but if something comes up where your LLC is in question, it's something they will look for. So make sure you have that. Again, one of those things that it is really good to get into the habit of operating like a real business, and having that operating agreement is one of those things. And like I said, file that proof of publication that you get from the newspaper after the 6 weeks are up. So here, your operating agreement is similar to the partnership agreement. It spells out the internal functioning of your LLC. This is your LLC. You decide how it functions. This documents that. Your articles of organization, again, that's going to be a very templated thing. You want to have these name of the LLC, the county, the date of dissolution. That's something that's, again, might be in the template, might not. Your designation of Secretary of State, that's very important. And that's one of the things that you'll be publishing in the paper. Optionally, you should put in there whether it'll be managed by 1 or more members. I think I saw it was either a question in the chat or one of the hands raised. You do not need to have multiple people to be an LLC. An LLC can be 1 person, single member LLC. But you will want to make sure you have something designated as who your people are if you do have multiple people. Advantages, you have the same advantages of a corporation. You don't get that double taxation we talked about. There's no restriction on the numbers and types of owners, i.e. members. You don't have restrictions on their participation. It's a flexible structure, and those losses flow through to the owners. I will say again, to go back to what Michael talked about earlier, losses can be good, and I think it actually was Adam who also said, it reduces that adjusted gross income. So it could lower your tax liability depending on where you are financially. So file it, which is why they have that under an advantage. Disadvantages, you have to provide all of those different provisions in your paperwork. Some investors might not be so hot to invest in an LLC, and it's more expensive just because of that publication that you don't have with the other entities. As an LLC, you don't have that double taxation. You can be you could choose to be taxed as an S Corp, as a partnership, or a disregarded entity. That is something, again, you're going to want to talk to your tax professional to figure out what is best for you. All of these are optional. but you want to know what's best for you. And other filings, I think I saw in the chat as well, your DBA, or excuse me, your LLC can own a DBA. Your LLC can have a DBA. You can be Greatest Cakes LLC doing business as Greatest Cupcakes in the world as a DBA. So you just have to decide what's best for your business. It could be you're doing the same work, you just want to do something different with the name. It could be that you have another stream of income that you want to stay attached to your LLC, but run it under a different name. So you have options. You just want to make sure you choose the one that's best for you. I do want to talk a little bit, I'm not sure if it's on this slide, but talk about piercing that corporate veil. What that means is you have protections as an LLC, unless you operate it as a DBA, meaning you commingle funds. You don't file the paperwork like you're supposed to. There are some people out there that never did finish filing that publication. Some people I know personally. Oh yeah, I forgot, didn't do it. Oh yeah. Well, they have that filing certificate. And if you look in the state, it kind of shows that they're registered, but it's just a matter of time before it all comes home, because that is part of establishing yourself as an LLC. And when you operate that way, where you're not meeting the standards and not following the regulations, someone can come through and say, yes, their structure is an LLC, but they haven't done XYZ to maintain that status as an LLC is supposed to. Therefore, I'm going to sue them as a DBA. That's the high level explanation of piercing the corporate veil. So you want to make sure you stay current on all the things that you have to do. So you're free to place membership interests into a living trust for beneficiaries. That's part of that exit strategy we talked about earlier. You have more options for raising capital. And that's, a lot of people are more comfortable with LLCs, obviously, versus a DBA. And your business enjoys legitimacy and credibility when dealing with other companies. It sounds a little more impressive and like you are truly committed to operating a business when you incorporate as an LLC, as opposed to just a DBA. And you can protect yourself. Well, so here it is. You can protect yourself from personal liabilities, but you may be liable for debt if you personally guarantee a debt, which I can tell you in this climate, probably for the past, I don't even know how many years, it's almost unheard of to not have to personally guarantee debt with a business. Yes, your business can have all of the separate paperwork it wants to have, but when it comes to taking out a loan or incurring any kind of debt, they want somebody to personally guarantee that, and that's most likely you. And if you can be liable if you intermingle your funds. Once again, you cannot have a bank account that's for your business that you just operate like your household budget. Your business is its own entity. As an LLC, it makes money, it loses money, it pays money, it receives money, but it is that business's money, and you have to treat it as such. You don't want to fail to pay taxes. You want to make sure that your business has that Schedule C, even if it's a loss, because that is what's called business activity. And that's what people look for. Both we see it not only in the financial aspect, but if you decide to become certified, I don't know if this program talks about that, but if you decide to become a state certified business, one of the things they were looking for is tax returns. They're also going to be looking for your invoices, your paid receipts, all the documentation that shows you are actually running a business. And if you don't have that, it doesn't matter how many years you've been doing it. As far as they're concerned, you don't exist. So you want to make sure you continue to keep all of that together and keep it on a regular basis. Key takeaways: when you're starting a business, You want to be talking about your tax structure and your business structure. Get with those professionals to figure out what's best for you. Because it impacts your taxes. It impacts the paperwork you have to have as a C Corp. You're going to have much more paperwork. There's many more regulations on how you need to operate and run meetings and keep meeting minutes and all those things that you have to do from a regulatory standpoint that you won't have as an LLC. And each one has its own advantages and disadvantages. You're going to have to make a business decision, but don't make an uninformed business decision. Talk to people. As Michael said, you're not out here by yourself. Talk to other business owners. Talk to people who are like Pathstone, who have these connections to people. Find out what the best one is for you. Talk to a few different people in a few different lanes to understand what's available and what's best for your business. No business structure will suit at any and all business. It's all dependent upon how you run your business and how you choose to run your business and what you plan for the future of your business. So engage those professionals and let them help you through the process. Don't incorporate in you hear a lot of people saying everybody should incorporate in Delaware. Might not be the best for your business. You want to make sure you get all the advice you need to make the decision on where you incorporate. Then you want to be compliant, as we talked about all of these things. Believing the corporate veil equals unlimited liability protection. It does not. And incorporating in the wrong state. So with that, 7 o'clock, it's time to ask some questions and then we can do what we do. Sorry I had to blow through those last ones, but it was a good conversation.
That was great, Kim. Thank you so much. It was wonderful. I know you did put a lot of hard work into that and just a great presentation. So now it looks like we've got 3 questions. I'm going to start from the top of my window here. Laurencia, I know you've got a question.
Okay, so my question is, if I'm a Pennsylvania resident, but now I moved to another state, how do I want to go about legalizing my business?
What structure is it?
So like right now, like I said, I'm still trying to decide if I should just start, with the DBA, and then make my way to LLC, or just go right into my LLC.
I would say you want to, again, talk to someone who can talk to you about your tax implications first, because that's money, and what the best structure is for your business. And I would, again, say talk to a few different people. See if you can talk to people who are in your industry. That would be a good start in terms of what they typically incorporate as. But it's not a standard recipe, if you will, that you step 1, step 2, step 3. It's really dependent on where your business is, what you want your business to do long-term, and what your risk assessment is for that business. Adam, I think you were saying something.
No, that was it. That was good. Because you got to think, if you're a professional origami folder
do personal
or something,
services, like assisted services.
Okay. Yeah, then you're going to want to talk to a CPA and even an attorney and an insurance agent and kind of get their input, because they can talk to you about the risk associated with that kind of business and the tax implications as well, just like Kim said. So I would seek out through personal recommendations, find that bail team, that banker, accountant, insurance agent, and lawyer.
All right, thank you.
Mm-hmm.
Ebony?
So I think this one might kind of go along with what the last speaker was asking. If I start my business here, for example, and I do make it an LLC here, and then say I move to Tennessee, do I have to like reapply there or become an LLC there, or am I still, under legally, like how would my business be considered if I move?
LLC. Is that you? Ashley?
Listen, if you decide to establish in New York State as an LLC, the ultimate question gets to be, are you still going to be doing business in the state of New York? If you're not going to do any more business in the state of New York, then again, let me do that wonderful preference. I'm not an attorney. I'm not a legal accountant. I'm nobody actually important. Anyway, all right. But the issue gets to be, you have to understand and think about exactly how the business runs. Kimberly said this before, and several of us have also said this. If you're going to still operate in New York just because you happen to move to another state, doesn't necessarily mean you need to stop the business, cease the business, go into another state, start a new business, because you're still doing business in New York State. You have to be clear about how you are going to run and operate the business. If you're running, and biggest thing, quickest piece, internet sales. Internet sales is national, okay? You can operate from any place. You decide to go to Tennessee because it's a better place for you to live as opposed to being in Buffalo. Didn't necessarily mean that the structure changed, but you have to understand that the tax implications change because of where your products are supposedly going to or where you made the sales from. But you don't necessarily have to change the legal structure or the LLC aspect of it, because maybe you come back here to New York State once every 3 months to sit around and visit some people and go to the bank, take some money out, things of that nature. If you're still actively engaged in business in the state of New York, regardless of the fact of you moving, you can leave your New York State LLC as it is. It's just like establishing another company. You go to another state in Tennessee, you establish one in Tennessee and you deal with Tennessee. You make the sales in Tennessee, you pay the taxes in Tennessee, you pay your insurance agent, your attorney, okay?
But I could keep my company name is kind of what I'm saying. Like, because yeah, I mean, like I kind of want my companies to become like a, a brand, like a franchise, like, one in New York, one in Chicago, like things like that. So
ultimately, you're going to change, you're going to change the overall structure that exists for the company potentially. Okay. But like Kimberly said, you can have LLCs, DBAs, subsidiaries to the particular LLC in and of itself that happens to be in 15 states and 4 countries. As you grow, again, attorney, accountant, okay?
Yes, thank you.
Insurance agent and your banker. You'll be good. All right.
Thanks.
You're welcome.
Jaden.
We can't hear you.
Jaden, do you have a question?
It says connecting to audio. You can't.
Oh, okay. Jaden, if you're able to put your question in the chat, we can get to it that way. While we're waiting on Jaden, does anybody else have a question?
I know in the chat, David mentioned if you could just talk through again what the corporate veil means.
Sure. Piercing a corporate veil. And I'm sorry, I'm just want to say, Jaden, I can see your mouth moving, but we still can't hear you. Piercing the corporate veil essentially means someone is coming through your level of protection that you are getting from incorporating. And they're able to do that because you are operating your business as a business that does not have that protection. So for instance, if you're an LLC, but you're not keeping up with the compliance of an LLC, which is very low, but I will say you typically for an LLC, that comes into play where you're commingling funds. That's probably the biggest way that they are able to do that, is you're operating that as a DBA. You're putting all the money in one account. You called yourself an LLC, but you put your money in an account that you use. All personal and business expenses are all out of the same account. So when someone pierces that corporate veil, they're saying, I'm going to sue you personally because your business is, you're not operating that business as a business. So I can come through and get your personal assets despite you having an LLC. And that means if someone is suing, let's say you make cupcakes and someone gets violently ill and they say, I'm going to sue you because your cupcakes made me sick. Well, if you're following all the compliant rules, they can only sue the business and they can only come after the business assets. So let's say that business is worth $50,000, but you yourself are worth $500,000. You've kept all your records, you've kept everything in place to be to stay compliant as an LLC. They can only sue up to that business assets, those business assets up to that $50,000. Let's say you have mingled and commingled all these funds and you've been operating out of your house and your business out of one account. And they see that you actually have $500,000 of personal money. They will pierce that corporate veil and say, I'm going to sue you for that money as well, because you have not operated your LLC as an LLC. Does that help?
Yes.
Yeah, that was great.
Thank you.
Sure.
Jaden, any luck?
Jaden, try to press like *6 or #6 on your phone if you've called in for the audio.
Okay, any other questions?
Oh, can you hear me now?
Yay!
Yeah.
Oh, I figured it out. Gosh, I can use a computer, just not my phone. With starting an LLC, like I understand there's all those steps to that. Now, where do I find that form for the articles of organization? Like, where do I find all those steps so that I can start doing them?
Are you in New York State?
Yes.
It's Department of State. I believe the website is Department of State, dos.ny.gov, I believe is
DOS.
And for every state, so I know we have like 5 or 6 states represented here. You'll want to check with the Department of State or Secretary of State for your state. Go to their website. It may be like Department of Business Services or something, but it's typically under the Department of State or the Secretary of State for each state.
Mm-hmm.
And then when I'm there, I just look up
LLC.
the articles of, okay. And then with the publications, does it have to be in the same county that your business is located?
In New York State, on the site, I'm pretty sure it's still on the website, they have a list of quote unquote approved papers, but
okay.
Their stipulation is that if there's a weekly, I think it has to be at least bi-weekly, but definitely weekly and bi-weekly publications are eligible. But in New York State, I know on the state website, when I incorporated 3 or 4 years ago, they had a list of publications that you could use.
Okay, so it has to be one that they've listed as, okay. Okay.
Mm-hmm.
I think that's the only question I had for now.
All right.
I think the final question here is, with an LLC, is it best to pay yourself with a check? Anytime you can pay with some kind of paper trail, whether it's yourself or a vendor or a customer, an employee especially, yes, pay with a check, pay with some kind of paper trail. Even if it's a direct, like an ACH or a wire transfer, something where you can go back and you have a record that's not just like, pencil on paper. In some kind of record that has especially a timestamp and a date stamp is great. That helps create that paper trail and that record.
Mm-hmm.
Would something like Venmo work for that, or is that not enough of a paper trail?
I would not recommend that. I would recommend something that, because you also, when it comes to paying people, including yourself, there's tax implications. There are tax implications. So you want to make sure, again, you're talking with your tax professional to give you some idea of how you navigate that. I will say, regardless of which state you're in, you do not want your state coming to you for not withholding taxes, employment taxes. They will take you down without blinking an eye.
Let me, I will tell you a story on that real quick. I know we're going to get out of here, but so when I took over the credit union a few years ago, I walked into a bit of a mess for several reasons, but I was also in charge of doing payroll and for making sure that it was getting done. And the CEO before me, she had been in charge of doing it, and she had done it for 20 years. So she knew exactly what to do and had all the accounts and knew where to make the payments and all that. Well, when I made our tax payment one year, it was in the middle of a government shutdown. So a few months later in the spring, 3 women in sunglasses and suits and lanyards with big placards on them that said IRS came into my office, and they said, "Are you Adam Tidrow?" And I said, "No, I don't know where he is." And I said, "Yes, I am. Let's go back and talk in my office." And we went back there, and they said, "Here's an issue that you paid, but you didn't file." And what had actually happened, what I came to find out, was that several people within my zip code had filed, but because it was a government shutdown, basically those files had been lost in cyberspace. But I was able to go into my desk drawer and pull out the file as they were standing there. And I said, I've got it right here. And they said, cool, just scan it and email it to us at this office and all that. So records are important because then you don't go to jail, and you don't get visits like that. That was terrifying. That's one of the most terrifying moments of my life. I was like, I'm gonna have to call my attorney. I don't look great in orange in a jumpsuit, so this is gonna be horrible. But keep records, track things. And then what I did was my very next call was to my CPA. And I said, you're going to start, I will pay you whatever you need to start doing our payroll and all that. That way I never get another visit like that. And if I do, I just send them to your office. So have good professionals, have people you trust, all that. So.
Yes.
Well, I think that,
Jaden, did you have another question?
No, I'm just trying to, sorry, I'm sorry.
It's okay.
No, cool. Well, that is it for tonight. Kimberly, thank you so much. A ton of great information.
Thank you all. It was great.
We will have Dropbox updated here in the next day or so. Keep in mind that Thursday from 5 to 7, we'll have a study table. So come in. If we get a few people who want to talk about the same thing, we can even break you off into a separate breakout room and all that. So whatever we need to do, if you would like to come and hang out with us from 5 to 7 on Thursday, come in, say hey. You don't have to come right at 5. If you want to come at 6:15 or 6:30 or 5:45, and you can just ask your question and leave, whatever you want to do. So if you have any questions, email us, give us a call, but we will see you guys Thursday, or we'll see you next Tuesday at 5:30.
Have a good night, everybody.
Good night, all.